The real estate market moves very slowly, much slower than the stock market, the NFT market, and the cryptocurrency market. So we have plenty of time to plan our next move. But the one thing that I'm very shocked about is how many investors go into the market without a proper strategy. Or they enter the market with only a short-term strategy, only a 1 or 2 year plan, with no idea what they're going to do after that. And I think that is a mistake, because real estate property investing is definitely a long-term play. And we need to plan ahead if we want to maximize our returns and make money in all kinds of market conditions, when the market is going up, when it's going down, or when it's just going sideways. Do you have a plan in place if interest rates were to suddenly go up by 2% next year? Do you have a plan in place if the market was to all of a sudden start booming again due to the reopening of our borders and the influx of migrants? Do you have a plan in place if the market was to suddenly cool off and become stagnant for a number of years? If you answer no to any of those, then don't worry, I've got you covered. Because in today's video, we are going to talk about my personal investing strategy for the next 5 years. This video is going to be packed full of useful content, so make sure you watch it till the very end. And if you want to hit that like button now, that would be great. Or you can do that at the end of the video. Just don't forget, because it really goes a long way in supporting this channel. Before we get started, I just want to make it clear that I am not a financial advisor and I do not have a crystal ball. Nobody in the property space can accurately predict what's going to happen next. So the best we can do is look at the information and look at the data provided to us to make an informed decision. So please make sure you always do your research and due diligence before investing in the property market. Now, let's get straight into the video. If you watched any of my previous videos, then you know my stance on the property market. I am very bullish, but I have very realistic expectations, and I definitely don't expect our markets to grow by another 20% next year. It is simply unsustainable. There are some markets in Australia that I think will do extremely well in the next few years, but even in those markets where I think the fundamentals are very strong, I don't expect to see consistent double-digit growth in the next few years. What we need to understand is that 2021 was a crazy year, and the monetary policies that were introduced by our central bank and the government are not likely to be repeated anytime soon. Let's be honest here. The only reason we saw such crazy growth in all of our markets was because the government printed a shitload of money that flowed into real estate, the stock market, cryptocurrency, and just about anything else that people invest in. But what we are seeing right now is that the money printer is slowing down. And many of the generous government programs to support the building, construction, and property industries have also slowed down. If we combine that with the unaffordable nature of our housing market and rising interest rates, then the macroeconomics point towards a slower growth in the coming years. And that is what I'm personally preparing for. Look, I am heavily invested in real estate, and I spend a lot of time helping my clients invest in property. So it is definitely not in my best interest to tell you guys that the market is going to slow down. But that is the truth. Based on the data, the macroeconomic factors, and everything else that we are seeing in the market, I want you guys to be honest with yourselves and have realistic expectations going forward. Don't get me wrong, I don't expect the property market to just drop off a cliff next year. I'd actually expect to see some very impressive numbers of maybe 6, 7, or 8% growth next year in some of our markets. But we need to be realistic, and we are definitely unlikely to see 20% again. Instead of looking at the market slowing down as a bad thing or the end of the world, let's look at it from a different perspective. When people hear that the market is going to slow down, they get very scared, because all they have planned for is for the market to keep growing, and that's the only way they can profit from their strategy. But let me tell you right now, we can make a shitload of money in a slower market too. Let me explain to you how. A lot of investors make the mistake of thinking that they make money when they sell something. I personally don't agree with that. I think we make money by buying something for under market value in a calm market. When we are buying into a hot market, we usually do a number of things. First of all, we tend to overpay because there is so much competition in the markets. And second of all, we don't usually get the best quality assets because there is just not too much on the market to choose from. And finally, we are entering the market at the middle or close to the peak of the growth cycle. So we're not taking full advantage of the entire growth cycle. However, if we look at what happens in a slower market where buyers have the advantage, we have more properties to choose from. we have less competition between other buyers, and we can find good deals for under market value. The words buying below market value sounds very foreign right now because there is so much competition between buyers. But in a buyer's market, when the market slows down a bit, it is very easy to find deals for under market value, especially when sellers get desperate after having their property sit on the market for a few months. You guys all know that I am not a big fan of the Melbourne and Sydney property markets, but the last time I purchased a property in Melbourne was back in 2018, when the housing downturn was at its worst. I was able to buy a property that would have probably sold for more than $1 million back in 2017. That same property, I was able to buy it for $750,000. Why? Because the property was sitting on the market for many months and the sellers were starting to get desperate. So I was able to offer them a quick sale. And in the process, I was able to get that property for well below market value. Look, I will never encourage you to try to time the market because it is very hard to do so, and not many people can do it correctly. But what I would encourage you to do is to prepare yourself financially so that when those good deals do come along, you have the capacity to jump on it and take advantage of it. Look, you have probably heard this so many times before on my channel, but I think cash flow is so important in so many ways. Having a strong cash flow or net cash flow position that is positive is going to make it much more easier for you to take advantage of the great deals that might or might not come up, because it gives you so much more flexibility and reduces the financial burden of servicing a massive mortgage, especially in an environment where interest rates are rising. I will tell you guys right now that my investing strategy has a strong emphasis on cash flow, and almost all of my properties are cash flow positive. The reason why I think this is very important is because this allows me to grow my portfolio faster, and it allows me to pay down my debt a lot faster too. There is the argument that if you try to get a strong cash flow property, you are sacrificing capital growth. That is true in some cases, especially for apartments or properties in mining towns. However, if we choose the right type of properties in the right locations, I believe, and as I have proven over the last 5 years, there is absolutely no reason why you can't achieve both strong cash flow and strong capital growth. In fact, my personal portfolio that generates a rental yield of almost 9% has over the last 5 years achieved a growth that doubles what we saw in Melbourne and Sydney. Strong cash flow might mean that I do get taxed a bit more on my rental income, but it also means that I can save a deposit quicker and buy more properties a lot faster. Not to mention the fact that a strong cash flow also increases your borrowing capacity, meaning you can borrow more money to buy more properties. By having a strong cash flow and the ability to come up with a deposit a lot quicker, I believe I'll be able to take advantage of the great deals that might come up in the next 6 months, 12 months, 24 months, or whenever the market does turn around. Because let's be honest, after seeing a growth of between 20 to 25% in our most expensive markets, it is perfectly normal to expect the correction or a pullback after this crazy growth, especially in the markets where homeowners have stretched themselves so thin that any movement in interest rates is going to lead to a lot of financial stress. Alright guys, we have just talked about how buying a property under calmer market conditions can make us a lot of money. But there is another way to make money during a slower market, so let's talk about that. We are right now in the middle of a property boom. And during a property boom, there is one thing that is very expensive to do. And that of course is building a property or renovating a property. During a housing boom, the demand for housing skyrockets. So naturally, the demand for building, renovating, and developing is going to increase a lot as well, which then puts upward pressure on the materials that we use for building these properties and for renovating these properties. This will also increase the demand for tradies and builders who work on these renovations and buildings. And trust me when I say this, building a house right now or even renovating a house right now is very expensive. And for most people who are trying to flip a house or do a development, there is simply not much of a margin right now unless you purchased a property a few years ago during a slower market. Which once again proves my point that your money is made when you buy something, not when you sell something. With that said, I personally don't expect the cost of building materials and labor to stay this high for the years to come. In fact, I expect it to start dropping in the coming months and years. Right now, the government, every man and his dog is trying to build something or renovate something. But after a while, how many train stations are you going to be able to build? How many times are you going to renovate your house in a 10-year period? And how many developments are you going to take on? After a while, the demand for these building materials and labor is going to die down. Combined with the fact that many of these generous government programs supporting the housing and construction industry is coming to an end soon, we are likely to see the cost of building decrease quite rapidly. So building and renovating something in a few years' time could be much more profitable than it is right now. So one thing that I have been doing for myself and for my clients is buying up a crap load of land. No, we're not talking about farmland that is in the middle of nowhere that needs to be rezoned so we can develop it. We're talking about large properties on large blocks of land that produce an income. And the best thing about these properties is that we don't have to develop it straight away. We can develop it anytime we like, because in the meantime, while we wait for the right opportunity to get into development, we are collecting rental income and our tenants are paying off our mortgage. So as you can see, having that cash flow there really makes things a lot easier, because that cash flow is going to make it easier for us to get a loan to commence the construction of these properties as well. Alright guys, I have just shared with you some of my personal strategies and the mechanics of the property market. It is time to talk about my 5-year plan. Again, I do not have a crystal ball, but based on the macroeconomic factors, the different property cycles, and the information that is provided to us, here is a rough outline of what I plan to do. And obviously, I will adjust the strategy accordingly based on what's happening in the market going forward. As of right now, I am staying far away from the Melbourne and Sydney property markets. And the reasons why have been mentioned before in my previous videos. I do have a development in Melbourne that is due to finish in the next 6 to 12 months. And when that finishes, I'll be looking to sell that and put the money into another market. From 2022 to 2025, the only markets that I will be looking into are Perth, Adelaide, Queensland, and some regional markets. The reason why I'm looking into these markets is because they all have something in common. And that is the affordability issue that we see in Melbourne and Sydney is not currently present in these markets, meaning that these markets are less sensitive to interest rates. And my personal opinion is that interest rates will rise in the coming years, and that is going to lead to a slower rate of growth in those markets where people are more sensitive to interest rates. Over the next few years, I personally expect to see a small correction in Melbourne, Sydney, and maybe even Hobart. But it won't be anything crazy, maybe 5, 10 or 15%, like what we saw back in 2018 when Melbourne and Sydney took a hit. If I'm able to find a great deal in Melbourne and Sydney in the next few years during the downturn, I will be using my cash flow and my liquidity to purchase a property there, which I will be using for my next development. Other than selling my developments in Melbourne, I don't plan on selling any other properties in my portfolio. Even though I expect to see a minor correction or slowdown in Hobart, I don't feel the need to sell my properties there because over the long term, they are still going to do quite well. And the cash flow that I am receiving from those properties is still extremely strong. To be completely honest with you guys, I do most of my work during a slower market because I am out there doing development, flipping houses, and trying to find good deals so I can get ready for the next growth cycle. Our psychology is programmed in a way to join in when everyone else is joining in, when the prices are already sky high. But common sense will suggest that it is a much better time to join in when everyone else is selling or when the market is slow. Just from reading the biographies of some of the smartest and greatest investors in the world, they tend to stay away when the market gets too hot, and they usually come back in when the market starts to dip. The thing that I have learned over the last 10 years is to always follow the smart money. Do what the smart people are doing, because what they are doing is usually opposite to what the general public is doing. It actually took me a while to program my mindset to think the same way as Warren Buffett and the Bill Gates of the world. But once I did, I never really looked at investing the same way again. And the results really showed that their investing strategy of investing when the market is slower is definitely much more profitable. Over the next 5 years, some markets will perform extremely well. Some markets will stay stagnant and others will see a correction. But either way, under all these market conditions, we can still find great deals. as long as we stay liquid and have the cash flow to take advantage of these situations. I'm going to stay consistent with my strategy of finding properties with a strong cash flow, as well as a strong potential for growth and subdivision potential. If the building costs start to drop in the next few months and years, I see myself doing a lot of flips and a lot of developments, because this will allow me to make a profit when the market is going sideways. Looking at the macroeconomic factors and some of the different markets in Australia, I believe some of these are going to do extremely well in the next few years, and I have already started to place my bets. So if you want to join my Patreon for a one-time offer of $20,000 a week, I'm going to make you rich and share these locations with you guys. I'm just kidding, guys. Go follow me on Instagram and subscribe to the channel, because I post all my purchases on my Instagram, so you can stay up to date on what I'm buying and where I'm looking. Alright guys, this brings us to the end of the video. I want to thank you guys for watching all the way till the end. It really means a lot to me. And if you want to support the channel, please hit the like button right there and comment your thoughts below. What would you like to see next? Make sure you guys have a lovely weekend, and I'll see all of you guys in the next video.